Hello guys, welcome to the Tuesday 11th of May edition of 5KP video program, mentoring program, video or online mentoring video. I'm broadcasting from Ayampe, Adam speaking, Option Mindful. Ayampe is a beautiful place. It's going to be very difficult to leave it. The ocean and nature and all this. And it's also a fantastic place, for trading because it's a relaxed environment, lots of nature, peace of mind, no noise, no beton, no plastic, just nature. So I really encourage you, if you're traders and if you're spending a lot of time on the computer, come to a place like that. It's very easy to disconnect. It's very easy to have a beautiful morning routine and freshness of mind. Okay, having said that, let's start with the program. Let's start with the video, and we're gonna have a very interesting program, of course, today, like always. And before we begin, I'm gonna bring in the warning, the disclaimer here. This video is for informational, educational purposes only. No advice is given here. It's just for learning. So if you agree, check and we go. And again, this video will be divided to two parts. First part is for YouTubers and everybody else and my students. And we're going to be talking here about portfolio performance, how is it going, and I'm going to come back to the Walmart trade. We did the broken wing butterfly on this one and see what's going on there. What should we do? Should we hold on to it or close it? Walmart didn't do any big moves recently. We've seen this W pattern here and then kind of like sideways move on, just riding this 200-day moving average, not really wanting to fill that gap, and that's what we were hoping for it to do. And time is ticking. Time is our enemy in this trade. How are we going to approach this trade? Are we going to give it a little bit more time, or we're going to just close it with a loss? That's something that we're going to discuss here. And then we will move on, and we will move on to the optionmindful.com Academy members part. So not for YouTubers, just for the students of Academy. And what we will do here, we will look at the benefits of compounding with uranium and gold stocks. So just go and check the list, how the compounding is working for us on uranium and gold stocks. Actually, is the stuff that we see in the monitor page of our trading platform telling us the truth, or we can look at the account statement and see how have we been performing. So what's the performance of today? How much is the stock really bringing? How much profits is bringing for us really? Then we'll look at the performance of new kid on the block, crude oil, and we have one trade which is on PBR, that's Petrolero Brasileiro. And I will also introduce another one kid on the block that I would like to trade. I'm probably not going to trade it because we don't have much currency in our portfolio available. It's a small portfolio. We're trading here 5K account, very small one. Not so much room for playing around, not like with the big account here, but still we can do quite awesome things in here. But before we go there, I also want to do a little update on the markets. So I'm going to move on there right now. I'm going to switch to briefing.com first, and then we'll look at the S&P 500 and VIX and so on. So what you can see, what's going on today is industry watch, consumer staples strong, weak sectors, discretionary, energy, industrials, and information technology that has been weak for a long time. And we have quite strong drop here, like strong correction of 1.3% on Dow. On Nasdaq, you can see really also the same number. S&P 500 also slightly down. What's going on? Moving the market fades on early efforts to buy the dip. So there was, it was going down yesterday, continues today, and no one buying the dip. Well, Fed will buy the dip, guys. If you don't buy the dip, the Fed will buy the dip as well. They're just going crazy right now. So let's see. I don't think this will continue, and you will see this when we look at the chart of S&P 500, or basically in the futures of S&P 500. Broad market weakness right now. I don't think it's gonna last long. Pestering inflation expectations. What are you talking about? There is inflation already. Manifested in uptick in longer traded treasury yields. So we should look at maybe 30-year long. Is the yield going up now? And what does this mean to gold? We heavily invested in gold in our portfolio. So let's discuss this, how does this affect the gold prices right now? Because this thing may change. So if I just quickly go and I skip economic calendar today, there's really not much there to see. You see, basically tomorrow we'll see CPI numbers. There will be some oil inventory, blah, 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 but not so much going on, retail sales this week. So I'm going to skip that, and I'm just going to jump into Finviz and look at this relation that I've been discussing between a long year, 30-year treasury yields going up and 10-year treasury yields also going up. You see the change is like 1.62, that the yields go up on both of those, 162. And most traders look at the 10-year yield. In the briefing.com, they're talking about increase in the 30-year treasury yields. That's a massive number here. Okay, we're going to 2.3. Is this going to continue? I don't think so, guys. I think they will introduce, our economy cannot really handle this. If the yields go up, super crazy up, it's just impossible, So Fed will probably step in and start controlling that number at some point of time. But what does it mean if the yields go up? What for assets that we actually own? Well, if 10-year yield goes up, that's something that they're gonna pay you. That's like actually crazy, but that's something that's in percentage number that they're gonna pay you, for borrowing or lending your currency to the government. Okay, so that means that if you just keep it on your account or you just hold that bond, that's what you're gonna get in return. Assuming that inflation is not high, that may be beneficial to you one way or the other. It's considered to be a safe asset. Well, I'll say that only people who are really gamblers would be investing in this. But it has a correlation to gold. Typically, when yields go up, gold goes down because you get some return on investment on an asset which is considered very safe. Gold is also considered a very safe asset, holder of value, but doesn't pay you nothing. So this pays you something, this does not pay you anything. So if this goes up, this goes down. However, gold has another property in here in itself, and that property is the storage of value at inflation hedge. It's an insurance against inflation. This is not an insurance against inflation, This may not keep up with the inflation rates, and inflation rates can be, with CPIs, can be basically lies. But gold always, it's true money, it's true currency. It's like you cannot cheat gold. Gold is gold, it's an asset, it's a metal, and it has 5,000 years of proven history of being inflation hedge. So I think that at some point of time we're gonna reach the point where, even though this goes up, and we're paying more for holding this 10-year treasury, whatever, papers, if we get paid for this and more, the gold will still continue going up because people will be so afraid of inflation or hyperinflation hitting us that bringing this to be completely worthless asset. So we're not there yet. So you see that as this goes up, this goes down, but not significantly. This went up by 1.25%, this went down by 0.47. So we're getting closer to the point where gold will not be reacting negatively on changes in treasury, but that's something to observe, and watch that transition. So right now, that's how it reacts. If this goes down, gold goes up, and we will look at this later. Also, this has significant impact on silver. As you can see, also oil is going down. This is really crazy because we had recent news about some cyber attacks on pipelines and so on. Well, US economy is driven by oil, so I don't think that Fed and all the powers to be will allow crude oil to drop any further. So I think maybe it will go a little bit down, but seeing it at the levels of 70 is not a joke. I think it's just going to come back up very, very soon. Maybe now it's an opportunity to stack a little bit of that asset, or companies digging that asset. That's why we're going to be talking about this a lot today. So as you can see, slightly bearish market today. Everything is red. Not many companies showing anything green. Are we having a problem in our portfolio? Probably not that much as people who hold Apple or something today. Why? Because I'm going to show you why when we move to our portfolio. Let's look at the market first. And Well, you see this little dip and going down, like sell-off, little correction. We didn't have any correction for a long time. Now it's high time to have this. And you see, I've drawn this line long time ago. Actually, I kind of, changed it a little bit, but not, long time ago I draw it, and it simply moves. It's really easy to predict where it's gonna go. So it would not surprise me if this kind of goes down in here, touches that line, and just slides here and just goes back up. And I don't expect any massive drops in the market. Fed buys it all, buys the bonds, issues them, and then buys them back, and then buys the stocks, and then uses some other way to not be so visible with that, and so on, and puts our attention towards some other things like, I don't know, cryptos or whatever. Just stay away from looking at what Fed is really doing and just printing the digits. But essentially what we will see here is this just continues going up. That's in my opinion. And obviously, like oil, okay, it's kind of like up now, right now. Gold slightly down, silver very slightly down, which is great for us because we invested in lots of silver mining companies. Cryptos, I just look at Ethereum. It became like the new Bitcoin, like Bitcoiners maybe escaping from Bitcoin going to Ethereum. I'm looking like some newer generations cryptos here, like Bitcoin's the first one. I don't even put it here, but maybe I should, just to have a comparison. And then I see the second generation, which is Ethereum. Now people jump from first to second, and now this is like 4K. It's fucking crazy. And I see the third generation of even more modern and more, fantastic, let's say technologically speaking, blockchain technology, whatever, software, Atom network. This thing is also going up a little bit, but it's very slow. Yeah. So I think the move is from Bitcoin, ETH, and then after this gets basically full of currency, maybe there will be jump to the third generation of technologies. I don't know. Just watching this for fun. What else? We'll look at our portfolio now because I don't want to read any news. The only important news for you is, guys, like around this pipeline. There was this cyber attack, and now it was very. Now when I search here for oil, oil, where is this cyber? It's like it's gone. Deadline arrives. What's happening with the oil pipeline, which was hacked, and it should be such a big deal? Why are we not talking about this? I think it's going to be another event coming up soon, very loudly, and that will drive prices of oil up significantly. So maybe it's a good time to jump in and profit from commodities like oil too. So I'm profiting already from gold, silver. We add now oil and energy, also uranium, so we'll add oil to our portfolio. We did already, as commodities is the place to be invested in my opinion, right now. So let's jump into our agenda and look at the portfolio performance, and then talk a little bit about this Walmart for you YouTubers and of course my students as well. First of all, portfolio performance. Where are we now? Account size is slightly shy of 8K. It actually was reaching 8K today, and it's a shame that it dropped, so I couldn't show you this beautiful number. We are 3.1 or 3.2K year to date up. That's pretty cool because we are still in May, not even halfway, throughout the year. The markets have been crazy though, so about this. Today they're dropping, they continue the drop, but have been really cool and good and rewarding for us. And if we look at the positions in our portfolio, we have lots of positions, but small ones. They just block a little bit of our purchasing power. And you can see we don't have many losers. So first loser on the list is AG. Okay, is it really a loser? No. Why not? Because compounding. But this is a company which I would really like to own in this portfolio. It's a silver miner. Shows a little shy of $50. The rest, as you can see, there's like no problems at all. Maybe except with the UUU. I think this is UUU. That's uranium miner, and Walmart. And Walmart is something that we're going to be discussing here soon. I'm also here with Vanek Gold. I bought 100 shares of this just for some speculation. That's a junior miner. Probably you should have like many in your portfolio if you like really gambling and trying to find golden nugget. in one of those junior mining companies. It's very risky, but I find this very interesting because also Eric Sprott is invested in this, and I really like it. So I have 100 shares. I'm just going to wait and keep it until I see some positive numbers here. It's very cheap right now, so gamble a little bit in this portfolio as well, just for fun. Let's talk about this Walmart. It looks like it's losing us 16 bucks. Doesn't make any sense to keep that position. Also, before I go there, I just want to mention the theta in this portfolio, because gamma we cannot see, delta we cannot see, it's not available because some of these things cannot be calculated, but we're very bullish on the companies. If I just remove beta weighting, we are very bullish on the mining companies, like really bullish numbers, yeah? Okay, and silver as well. As you can see, we're actually in our storage. Remember, I was storing my wealth in silver. I said I'm not going to keep currency for savings. I'm going to keep all my savings in silver. Well, now it's more savings there, measured in dollars. Yeah, really nice. Theta, 25 bucks per day. What does that mean? I'm going to bring a calculator. Okay, I'm going to show you what is our income from this portfolio monthly. 25. I'm just going to be, okay, let's do the exact number, times 30 days, more or less, per month. We're making $753 every month from this portfolio. If we keep that number at this level, it's 750 bucks a month. Okay, so pretty cool. Do you think with that number, oh, now we have 8K. Do you think with this number we can get to 10K? Yes, we can. Until August, yes, we can. So very cool. I really want to see this portfolio reach the 10K, and then the goal of basically, doubling the account will be fulfilled, and I'm going to be very happy. That's going to make me very happy. I can show you that you can do 100% of return on investment on a little portfolio as 5K by applying some more conservative strategies than just buying some coins and expecting them and gambling and so on. We're not gambling here. We're actually trading here. We're actually having strategies, and we're not looking for quick gains. We're looking for steady, stable gains which can give us financial freedom. That's what we are doing here. So Walmart, let's look at this Walmart. That was a little bit speculation from our side because, looked very good on the chart. We have 24 days till expiry. That's the first thing that I want to notice here. Where is the stock trading? It's trading a little bit below 140 bucks per share, and it's going down. Okay, it's coming down a little bit because it follows the market. It follows the market. The market is going down today. We're having this little correction. Well, how much correlated is Walmart actually with the market? I can quickly check that. I'm just going to show you how to do this. You can do a little funny, cool thing here on the watch list with current positions. At the bottom, I have a Walmart here. I'm just going to click here. I'm going to say customize. I'm going to say bring me a beta. I want to see not bad, but beta. Beta. Show me beta value here. Okay. Also, not just bid ask and net change and so on. I want a beta. Okay, now it pops up another column in here, and I can see how correlated is Walmart with the market. So if the market goes down by 1 point, I may expect Walmart to go by 0.38 down. So it's not very correlated, which is a good sign. It is correlated, but it's not very correlated. So if market slides a lot, Walmart does not slide that much. So very important to know before we made any decisions. To know this part of of the trade, So what are we dealing with here? I want to remove that now. I want to have some clarity here and take less space. Okay, so market keeps going. It doesn't hurt us so much. When it keeps coming back, okay, then it's gonna profit. But there is something else that drives Walmart prices. Walmart sells stuff to eat. It's something and stuff that we use daily. That's something that actually will probably never go out of business unless they do something really, really stupid. They also do online deliveries and all kinds of things like that. Solid business. We could also check the fundamentals, but we did that already. So we know it's a solid company. 24 days. How much are we losing on this trade every day? That's another thing to look at. 24 cents per day. That's our time decay on this trade. Okay, 25 cents per day, 20 cents per day does not hurt me too much if I waited a little bit more longer with this trade, give it a little bit more time to run. Okay, one thing that I don't like here is that actually Walmart went down below 140 support zone. So 140 was a space which was really cool, because then it opened up for going to 145s, which we wanted to reach. Now it dropped a little bit below, like almost $1. Okay, on the market going down. Will the market keep going down? I don't know. It may bounce. I think this week probably it's going to bounce back up. But I don't like that. It's just something that I don't like. Okay, let's look at the chart as well. And I see there is some earnings coming. When? Earnings coming on 18th of May. Okay, should we wait until that time? I don't know. Let's have a look at the chart. Loss is $20. It's not killing me yet. It's like something like, you know, I'm just not gonna go for lunch today, and you know, I'm not spend it, so whatever. Let's go, but I will, don't worry guys. Not analyze, let's go to chart and look at the Walmart. You see what Walmart has been doing here right now. I'm gonna look at it from all technical perspectives. It has dropped significantly. It kind of recovered yesterday, went towards 142s almost, and today, because market was dropping, it dropped with it and came down below 140, but it still didn't break that zone here. You know, that zone here is the last lowest lows, let's say, or the last lows. You see this, when you look at this chart, the lows have been going up. So we have higher lows with decreasing momentum a little bit, but there is like energy, there's energy accumulating in this trade, like really a lot of energy. So these were lower highs, but now we have higher highs, slightly higher highs, and now it's coming back to the lows. Where these lows will be, I expect them to stay somewhere here, definitely above this level, which is 137.5. If it breaks these lows, I start to worry, okay? If it breaks these lows, 137.5, I'll be like, you know what, get out of this trade. So what I can do here, I can set an alert and say, you know what guys, 37.5, notify me. Walmart, time to exit the butterfly. Probably going to go down now, okay? Just my thought. Obviously I can be wrong and so on, but you see why I'm doing this. So if I'm at or below 37.50, I want to be notified to get out of this trade. That's what I'm going to do. I'm going to set my alert, and also now it's really visual. Where is my limit here for Walmart, where I don't want it to go? If it just wiggles around here for a while, I'm just losing 20 cents on that trade every day, which is not that, you know, it's not killing me. But I still have this unfulfilled potential. I have this energy here. There is this energy. I want to see where this energy will take Walmart. Is it going to take it really high to 145s, 144s, and fill that gap finally, because it seems like it's having problem to fill this gap, or is it going to take it down? If it takes it down, I'm out. It's all right. If it's going to take it up, I'm going to make some profits. So I still really want to stay in this trade to see which direction it will finally take it. If it's going to keep continuing just moving sideways on this 200-day moving average, well, at the point where I see no reason for it to, like, basically to be in that trade and the trade losing $1 a day, I'm going to exit. Okay, let's have a look at the Analyze tab just to see risk profile. We're sitting right now right here. Where we want to go is right there. Do we have a chance to get there? Well, look at the light gray area. I'm just gonna put my cursor over it, and so you see this is where it reaches. That's where we can be 68% of the time. That's where we can end up, okay, 68% of the time. Right now we're sitting here. We have a chance to get in here easily. So if I move that slice, okay, well, 72.80% of the time we will be somewhere around that area. How much chance do I have to get from here, percentage-wise, to the middle? Well, okay, it's like, or above, let's say, to the middle, not so much, but or above. This is 50-50 trade still, okay? So if I bring that basically here, okay, and if I'm here, okay, that's like 52, 32 plus to go that direction. So it's a 50-50 trade, 48 basically to 52 trade. I'm still okay. I would like, probably it's less probable to get towards this number exactly, but I still have a chance to move there. The gray area tells me that there is a chance that the Walmart will still go up within these 24 days, and it can go up even to this level. That's what we expect 68% of the time. This would not surprise me if price goes to 149, in which case I will be collecting $200. If the Walmart decides to go to 145 and just stop there forever, max I can make, watch this number, is around $600 or 590 something. Do I reach 600? No, 591, somewhere there. Why not stay in that trade? I'm not being punished. I'm not feeling too much pain right now. If it drops to 137.5 though, this is my exit. I'll be losing like $65 on this. I'm not gonna let it go to lose me all $200 unless it drops like significantly to 130. Then I'm screwed. But then I'm gonna exit, and I'm still not gonna lose $200, 150. But if it doesn't, I have very nice potential to make some gains. So still, even though I have 24 days in this trade, I'm going to stay a little bit longer in it. Since it's a broken wing butterfly, I could actually move the call side a little bit. Since it's a losing side, I could actually adjust this trade and maybe move it to 144s from 145s, bring in some premium, but I still see that potential. I'm not going to touch this trade right now. What do I mean by that? I could just roll it, right? I could just say, instead of having this, oh wow, yeah, I was talking to you about completely wrong numbers. So we are actually losing $20. Max potential is 278, and win if we go above 92. The rest is the same. So we can't lose 200. We can lose only $108 in the worst case. Okay, we're not so much into this trade with so much currency. We're not gambling too much. Yeah, but yeah, and I lost my point. But now the point was that I could still move the head of this butterfly towards 144s, and by doing that, I would have to create a rolling order, and with this calendar, and just move it to not change the expiry date, because the expiry date is June 4th. So I'm gonna stay with June 4th, and instead of 45s, I could do 44s. I would receive $26 for this. Okay, I would have much more limited potential for profits, but let's analyze this trade. No, it actually did it already. Okay, the analyzed trade. Yeah, 144s. What is this doing? Did it? Yes, if I do that trade, basically, yeah, I'm not having such nice potential for making money. Why? 144. I think something is wrong with this calculation. Aha, 2 contracts. Let's bring 1. Now it looks more like it. So I could bring $20, but my potential of wins goes down, and here also goes down to 18s. If I don't have that, well, I can still make $92, and basically limit. Why not bring that actually? Because no, I don't want that. Not yet. I'm not going to be adjusting this trade prematurely. We have clear strategy with this, so I'm not going to change this, but just to show you guys, if you were not so sure that the Walmart may go up and reach that level of 144s, 145s, you could roll this down, 145 calls, collect $20 profit, move it to 144, and then, have maybe less win potential, but also less loss potential for this trade. And it's just a method of basically recovering some of the losses from your trade if you're not so sure. Yeah, but now I think it's too early to adjust. Let's wait for it. Let's wait for the markets to recover and see then if they continue dropping, we can adjust it like properly. Right now, I'm just going to sit on this trade and wait a little bit longer. Give it a little bit more, a few days. Yeah, maybe this week definitely I can give it to make a move one or the other direction and make a decision. Okay, let's see what happens. So that's what I have. We're just going to stay in that trade. That's what I have for an update for Walmart. We do nothing with it. We wait this week and see next week what we should be doing about it. All right, guys. So let's continue with the part for the Academy students. And we'll just be looking today at the per portfolio individual items in there, and then benefits of compounding with uranium, gold stocks, and so on. And then I'm going to talk about one trade with oil, okay, which I would like to recommend to you or to play with on your paper trading platform, of course.